Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. It is the 24th of the 1st, 2023, and this video is going to be your daily cryptocurrency market update. We do one of these videos every single day for anybody that's new to the channel at 1 p.m. UK time, which is GMT. You have before you a very tired All in Crypto here to deliver a exciting video because we are going to be exploring what institutions are doing. Now, we've previously mentioned grayscale potentially being a leading indicator to show you what smart money, quote unquote, is doing. And actually, I've got a longer video coming out dealing with the specific altcoins that were accumulated recently in Coinshares. But we actually have and are seeing a very polarized institutional investor. And it looks like the US is still very bearish, but actually Europe is bullish on crypto. And we're actually starting to now see inflows back into the crypto space and attention shift back to risk, having been out of it for, a long time now, really, since rates started to go up. And we've really been going through and painting the picture and showing you the narrative of rate hikes, what it does to liquidity, this whole thing. I mean, there's been so much learning on this channel. It's really been an amazing journey over the past 2 years that I'm very honored to have embarked on with all of you guys. But essentially, the narrative is shifting. I originally saw this from Tim. We did a longer video on this, looking at Jamie Dimon and actually Paul Krugman's comments, where they said we're not as bearish as we were last year, and actually maybe we were slightly over exaggerating things. This was from Tim. He goes at Vola Tim, great guy to follow. I know he's a friend of David Bell. There's been a real narrative shift, and you can see this in the bond market, for example. And we also know, there's a number of things going on that we're going to talk about in this video. We will start on the institutional side of things. We are going to do, of course, some TA on Bitcoin. We are expecting a pullback, but the problem that you've got is we were expecting a pullback here. And let me go and shrink my face a little bit. We didn't get it, and we were being greedy. Well, we got the pullback, but not to where I wanted it. And we subsequently missed out on a move that went from 20K to 23. But bearing in mind, we've caught the majority of this. We started speaking about buying on the 5th. That was before the move had even taken place. Many people are now bullish after the move. If you guys are serious about investing and want to join a community that is also, feel free to check out my Patreon in the description. So we are going to go over that. It's been a really tough week or month for me because, like I say, we've took a position back in the cryptocurrency market, having been out of it for nearly a year as a community. We invested for the first time in the start of the year. And, it's because we foresaw, looking at things like we spoke about before Christmas, the 2-year yields, US yields, and how that leads the Fed funds rate. And that kind of suggests that the Fed hasn't got even a point left in them. Then we had the CPI that came out after that, after we'd spoke about it, nearly a month or so after we'd spoke about it. And now you have, the Fed coming out and there's being this more hawkish or dovish tone with lower inflation, and it's kind of continuing to trend down. Before we get into everything, guys, because we've got some really, really interesting stuff to get into, including some Bitcoin TA, I want people to know that it is earnings season. And this week, we have 20% of the S&P's earnings coming out. This is going to affect the stock market. Stock market is already at this kind of, although it's had a good day thus far, it's at this kind of pivotal level here. The good news is the rejection you had here, it's waning. And we've actually said, you guys know that we're fans of bullish divergences on the RSI. I know RSI is a lagging indicator, but in regards to looking at a trend, I think it can be quite helpful. Looking at GBTC as well, which is Grayscale's trust, which is kind of an institutional way to gain exposure to crypto, and also Coinshares is as well, but we'll talk about that. You can see that you also have this bullish divergence. We've highlighted the bullish divergence of the S&P. We've highlighted it. We've highlighted the bearish divergence on the dollar. We've highlighted the bearish divergence on the likes of stablecoins. And this is all filtered through and actually what led us. These are quite a few factors we've given you, but there are, when I analyze a market and analyze my investment stance and position, it's not just off of one or two things. It's off of multiple things that all point to the same situation taking place, or likelihood of a situation taking place. We don't know for certain jack shit, okay? 100%, but we can take a good probability guess based on things and hopefully be on at least the side of probabilities. And if it goes wrong, we can, deal with that and adjust accordingly. So we've highlighted all this. So I want to really dive into this article because this was interesting, some of the key takeaways. And we actually saw flows. We saw flows into a number of altcoins that have recently, this article came out on the 23rd, gained this inflows. Well, we were inflowing as a community, the Patreon and myself, at the start of the year. And we did have comments saying that these videos come out very braggy sometimes. Forgive me, but I want you guys to go to the Jewel Maker. We read that passage from The Richest Man in Babylon. I don't think I've got the book here. Where we essentially brought up when Arkad was learning to become the richest man in Babylon. Once he had saved the 1/10 of his earnings for a year and then he went to invest it, he gave a brickmaker the 1/10 of his earnings that he had saved all last year. And he went off to go and buy jewels. And Alchemist said, "You're a fool. Why did you give the brickmaker money to go and buy you jewels? Why didn't you go to the jewel craftsman?" And this is why I maybe try and prove my point and show you that we're actually making real decisions and ahead of time and before the move even occurs, so that maybe we gain a little bit of credibility and we steer you away from those content creators. You go into content creators for investment takes. You're coming here to a real investor, a real trader, somebody that does this for a living and has been doing it now for a while, for his thoughts and opinions on things. So let's go ahead and read this, and then we're going to get into a number of other things. This I found very interesting because everything right now, we've got this very inverted yield curve. Anyway, I'm going to focus on one thing, guys. My often do that, jump around all over the place, but it's because my brain fires a lot faster than my mouth, unfortunately. So let's get into this, guys. Volume 115. I can go ahead and get rid of my face. Digital Asset Fund Flows Weekly Report. The rally has revealed a very, very polarized investor. US bearish, Europe bullish. And this is looking at inflows and outflows. So it's not clear in terms of direct inflows, although you can see areas where inflows were very aggressive. I'd certainly say if you're looking at this, you're on the side of inflows. Digital asset investment products saw US $37 million inflow last week, although this was predominantly into short investment products. So there may be something to be taken there. This was largely a US stance. Regionally, option is very polarized. Inflows were seen in Europe, most notably Germany and Switzerland with $14 million and the US with $10 million respectively. Hong Kong saw outflows for long investment products, while the 95% of inflows into the US were in short Bitcoin products. So we've called a number of short squeezes based on the inflows. If you have big inflows into short products, you're going to get squeezed. And this is why this rally has been such a pain in the backside for people, because they don't want it. We said not bearish here. Everyone's still calling for 10, these levels to get retested. Now, it still could be the case if something catastrophic happens. But the likelihood is, that in my opinion, yes, there's a catastrophic event on the horizon. The yield curve is predicting this, but the yield curve doesn't play out until it's uninverted, which we're at a very inverted point right now. And at this point of extreme inversion has often been actually not a bad time to buy, because there'll usually be a rally up until the point where something breaks, so to speak. And we spoke about that double bottom or slightly lower bottom scenario. You've got to remember, we literally have waited throughout this entire time getting short here. Not the earliest. We ate a lot of that, but you got to remember we rode it all up from here. Until one of the largest crypto exchanges, I think the second or third largest in terms of volume, actually, turned out to be like a Bernie Madoff style scam. So we've been very patient and actually took a position here, which I think should be taken very seriously on all these bullish divergences on the weekly time frame. You also have anybody that's a fan of Stan Weinstein. He talks about stages of a market, and he talks about the 20 MA on a weekly time frame and how you want to be buying on the upside of it and selling on the downside of it. You don't want to buy anything on the bottom side. However, you want to wait for the break, potentially front round that. So we are seeing inflows for the first time in a long time start to come back in terms of sort of investment products. I know it's not on a mass volume, but it's showing interest, in my opinion, from an investment, from an institutional standpoint. And then you also have the likes of Grayscale GBTC. Also, we can look at Coinbase. This is something we've also highlighted that we wanted to buy. It's done amazing since we were calling for those buys. 78%. Come and get on the right team, guys. Seriously. Things, in my opinion, there's more reason to be bullish than bearish at this point. A recession with Fed funds never below neutral. The bond market isn't pricing a recession. In a recession, the Fed cuts way below neutral, which is 2.5, and credit spreads blow up. Today, the Fed is priced to never cut below 2.75, and credit spreads are super well behaved. This is immaculate disinflation pricing, not recession pricing. So they're essentially, the economy and everything is now banking on a very aggressive to the downside inflation, and subsequently, a kind of soft landing as a result of it. And I think soft landing, what seemed impossible, and remember, it's not a soft landing if things go back to sort of normalish and then there's a crash, but a soft landing is very much, I think, being bumped massively up on people's probabilities. This is Jamie Dimon changing his tune about the economic hurricane. He's not alone. This I found interesting. Macroalf's a great guy to follow, by the way, at Macroalf. New lows for the US leading indicator index. This indicator has a 100% hit rate, just like the yield curve. But the thing is, it's not until you've bottomed out and then you start coming up the other side of it, typically, that the recession happens on more times than not. So average lead time of 7 to 8 months. Has it topped out here? Does it come back down lower? It could be 7 and 8 months when it's, a few months away. This was also interesting. This is the S&P, and of course, high yield spreads. Market lows when it's at a high. Maybe this was the high and that was the low, and it comes back down. Still too early to sell, but everything that the picture that we're painting is actually, there's a lot more reason to be bullish, I think, at this point. And we only changed at the start of the month. Maybe we caught the low, maybe we didn't. We're not calling a bottom necessarily. We're just saying that, we took a position in the crypto market, and maybe we caught the bottom. Maybe, we get another chance at that. That's why you should always keep cash on the sides. If you want to find out more about that, there is a link to my Patreon in the description. That's all I've got for you guys. So remember, it's going to be a big week with all these earnings coming out. It's going to move the stock market in one way or another. US market is already down slightly, probably in anticipation of all this. The dollar is something I need to do a whole separate video on, because this is going to reassert at some point. And maybe it does something like this, and then maybe it comes down again. And maybe the dollar strength thing's sort of coming to an end now. We did say it was going to have a pullback here, but in all honesty, we were looking at maybe more of this situation. But we'll see what happens, guys. Still could play out, but the thing is, could the dollar be going up at the same time as Bitcoin? Because there has been periods where this has been the case, but obviously in a kind of macro trend where everyone's running to the dollar and it's going up through safety and a number of other things, then that's typically not the case. Although it's a situation we will monitor and keep you guys, of course, up to date with. So that's all I've got for you in this video, guys. If you've enjoyed this content, a like is always greatly appreciated. So as a comment, just a quick recap. We've got inflows going into institutional products. We've got inflows going into Grayscale in regards to not only their GBTC, but also their like ex-Ethereum funds and stuff like that. This is showing that institutional involvement is now shifted, and the focus is now coming back on risk as there's less of a risk to the sort of macro environment given all the data that we've had. All I've got for you in this video, guys. You enjoyed the content, like is always greatly appreciated. So as a comment, and I'll catch you all in the next one, guys. Please remember to smash that like button, leave a comment, and subscribe if you're not already. Thanks a lot for watching, guys.